So Apple stock is crashing after they did announce something that they almost never do, and that was that they lowered their guidance for the upcoming earnings report. Tim Cook has come out and addressed these issues in a letter to shareholders. So what we're going to do is go through this, dissect this, and figure out if Apple stock is still a buy. If you guys appreciate this video, drop a huge like. Let's try to get 150 likes on this video. It really helps out the channel, and I really do appreciate the support. But getting right into it, guys, when we look at this comparison right here, we can see what they initially predicted for guidance and what their new revision is for guidance. So first off, we can see that guidance for their revenue was down from around 89 to 93 billion to now around 84 billion, which is a 9% reduction from the high end. Next was gross margin, which stayed relatively the same at around 38%, which is previously guided between 38 and 38.5%. Next was operating expenses, which was guided at around 8.7 to 8.8 billion and is now around 8.7 billion. Again, more or less the same. Then we can see income or expenses. It came in much higher here than expected. Was guided initially around 300 million, but now seen at around 550 million. And finally, the tax rate remained the same, which is around 16.5%. So of course, based on this information that you just saw, the biggest red flag, in my opinion, is the drop in revenue guidance. For a company like Apple, it's extremely rare for them to miss or even lower guidance in any of their quarters. So because of the letter that was sent out yesterday, a lot of investors are beginning to question their investments now in Apple, and there's a lot of panic and fear out there in the market from Apple as well, as you can see from the stock price today, which was down at one point over 10%. And of course, with all of this weakness, a lot of the bears are out, and they're now comparing Apple to companies like Nokia and BlackBerry. But I don't want to get into that in this video. If you do want to see a video on that, make sure to comment down below and let me know. Now, the biggest concern here is when you compare year-over-year numbers from the quarter last year to the quarter that we're going to be seeing this year. Comparing companies' results to their guidance or to analyst expectations is one thing, but when you compare their numbers to what they actually reported last year in the same quarter to what they're going to report this year in the same quarter, that's when we can see truly if a company is growing year over year. So last year in the same quarter, Apple reported revenue of around $88.3 billion. So of course, this upcoming quarter at around $84 billion revised guidance is definitely lower than what they did report last year. And this decrease right here in year-over-year revenue is what's setting a lot of people off and is what's also putting a lot of fear out there with Apple stock. But now the real question we gotta ask ourselves is, what is the real weakness for this revenue decline? And the answer really is that it boils down to China. So as you can see here, China actually accounts for around 20% of Apple's sales for Q4, which ended in September. And although Apple hasn't been hit with tariffs yet, they are still seeing a lot of pressure here according to Tim Cook because the Chinese economy is weakening year over year. And here you can see that Tim Cook clearly states that the iPhone sales in China are the main culprit for this decline or this revised guidance. But the one thing that stood out is that the other segments are poised to grow by 19% year over year. Another interesting fact that I found was that Apple's current smartphone market share in China sits at around 7.8%. And at its peak in 2015, it was around 12.5%. So there has been a significant decline in their market share in China. And of course, as this number continues to decrease every single year, investors get more and more worried about the relevancy of Apple in China and on a global scale as well. But from this letter, what we did see is that Apple does not want to rely solely on their iPhone business. And from the results that we are going to be seeing most likely in the upcoming quarter results, there has been a lot of segments in the business that have been growing substantially year over year. Like I said, a 19% growth in their other segments like services, for example, is in my opinion what's going to propel this company back to a $1 trillion plus market cap. So as you can see here, services will actually bring in around $10.8 billion for the quarter, and they expect this to continue going forward as well. And remember, services is a very highly profitable segment of Apple's business, so pretty much most of the money that they earn from their services business is going to be put straight on their balance sheet in cash. On top of this, their wearables business like the Apple Watch or the AirPods have also been selling extremely well and are expected to post numbers around 50% growth year over year. And the last point that I want to make here that was addressed in the letter is that Apple expects their EPS to set new records here, and I believe that Apple will actually personally beat significantly on EPS in the upcoming quarter, even if they do miss on revenue. And this of course is thanks to, in large parts in my opinion, because the share buybacks that the company has been doing over the last few months. So going forward, one thing that did stand out in this letter and was addressed a couple of times is that Apple really wants to focus on their trade-in program for iPhones. Right now, they see a lot of customers on older generations iPhones like iPhone 5s, iPhone 6s, maybe even iPhone 7s. And they haven't really gotten into upgrade their phones. So Apple really wants to incentivize them and have a good trade-in program to not only help bring these customers to a newer phone and of course bring revenue up as well, but also to help out the environment and to kind of recycle old phones, which will otherwise just be disposed of. And like I've said before in a few videos, when 5G rolls out, I believe that this will be the next super cycle for iPhones. And I think iPhones will start selling significantly as well, because all those customers that are waiting on older generation iPhones have to have a good reason to spend $1,000+ on a new iPhone, and I think 5G will be that reason. So I do believe that 2020 and beyond, when 5G has fully rolled out and we have a 5G iPhone, will be strong for Apple as a company. But I do believe that 2019 may continue being weak for the company, as we may see revenue decline in the traditional iPhone units. So is Apple a buy right now? Well, I believe the answer is a strong yes. Now, if you want to see my bullish thesis on this and why I believe Apple is a buy, make sure to check out the video. I'll leave a link up there, as well in the description down below. I believe that over the next few years, say 3 to 5 years, Apple will be significantly higher than where it is right now. And if we do continue to see weakness in 2019, I think that it's going to present an even bigger buying opportunity for this company. So guys, remember, if you like this video, drop a huge like. We're trying to get 150 likes on this video. And if you want to see a video more talking about, say, the comparison between Nokia and BlackBerry to Apple, comment that down below as well. Either way, guys, thank you so much for watching. Hope you enjoyed this video. Don't forget to invest positively. I'll see you in the next one. Peace.